On a crisp morning in late 2025, as traders worldwide huddled over their screens watching Bitcoin's price movements, something extraordinary happened in an entirely different corner of the crypto universe. A meme coin, specifically Trump coin, experienced a meteoric rise that would make even the most seasoned crypto veterans pause. The asset surged 12,000% in a single day, creating and destroying fortunes faster than most people can read their morning news. This wasn't just another day in crypto. It was a perfect crystallization of the three distinct forces that now shape our digital financial future. Let me take you behind the scenes of what's really happening in the crypto markets, drawing from 2 decades of following financial innovations and their impact on human behavior. What we're witnessing isn't just about technology or money. It's about the fundamental nature of value itself. First, let's talk about what actually happened with Trump coin. Within hours of its launch, the coin went from mere pennies to what seemed like a golden ticket to instant wealth. Early buyers saw their investments multiply exponentially. But here's the crucial detail that most media outlets missed. 80% of these tokens were held by the project team. This wasn't just another statistic. It was a flashing red light that illuminated everything wrong and right about our current financial evolution. This concentration of ownership reveals something profound about meme coins that separates them from their more established cousins. Unlike Bitcoin's careful distribution mechanisms or USDT's regulatory compliance structure, Trump coin embodied a new form of digital feudalism, where value isn't created through technological innovation or practical utility, but through the raw power of social influence and narrative control. Consider the technical foundations. Trump coin operates on the Solana blockchain, chosen for its high speed and low transaction costs. But this technical choice is almost irrelevant to its true function. The real engine driving its value isn't the underlying technology. It's the collective psychology of social media-driven speculation. When you buy Trump coin, you're not investing in technological innovation. You're betting on the sustained power of a political brand and the viral nature of internet culture. Bitcoin, in stark contrast, represents something entirely different. Its proof-of-work consensus mechanism consumes enough electricity to power small nations, but this energy expenditure isn't wasteful. It's the very thing that gives Bitcoin its fundamental value proposition. Every kilowatt-hour spent mining Bitcoin reinforces its position as digital gold, creating what economists call unforgeable costliness. The technical sophistication isn't window dressing, it's the whole point. Then there's USDT, operating in yet another paradigm entirely. As a stable coin pegged to the US dollar, it serves as the crypto market's vital bridge to traditional finance. But what makes USDT fascinating isn't its stability mechanism. It's how it reveals the crypto market's persistent need for connection to the very financial system it claims to want to replace. The market dynamics of these three assets tell us something crucial about the evolution of value in the digital age. Bitcoin's price movements, while volatile, generally follow macroeconomic trends and institutional adoption patterns. USDT, by design, maintains its dollar peg through active management of reserves. But Trump coin's price movements follow no economic logic. They're pure expressions of social momentum and narrative power. Looking at the trading patterns reveals even more. Bitcoin's 24-hour trading volumes show clear institutional influence, with predictable spikes during U.S. market hours. USDT's volumes map closely to overall crypto market activity, serving as the lifeblood of cross-exchange arbitrage. But Trump coin's trading patterns are entirely different. They spike with social media activity and political news, showing how meme coins have become a new form of digital political expression. The regulatory landscape further highlights these distinctions. Bitcoin exists in a relatively clear regulatory framework in most jurisdictions, treated either as a commodity or a digital asset. USDT operates under increasing scrutiny, but within traditional financial regulations. Trump coin, however, exists in a regulatory gray area that exemplifies the challenges authorities face in dealing with assets that blur the lines between investment, entertainment, and political expression. What's particularly fascinating is how these assets reflect different aspects of human nature. Bitcoin appeals to our desire for sound money and technological progress. USDT satisfies our need for stability and practicality. But meme coins like Trump Coin tap into something more primal: our attraction to narrative, our desire for belonging, and our endless optimism about getting rich quick. The market impact of these different approaches is striking. While Bitcoin's migrations can influence the entire crypto market and USDT's stability issues can cause systemic tremors, Trump Coin's volatility remains largely contained within the meme coin ecosystem. This isolation is telling. It suggests that the market has developed an implicit understanding of the different roles these assets play. The social implications run even deeper. Bitcoin has spawned a global community of developers, entrepreneurs, and advocates focused on building a new financial system. USDT has created a network of traders and arbitrageurs who keep the crypto markets efficient. But Trump Coin has created something else entirely: a hybrid community of political supporters and speculators who view financial markets as extensions of social media. Looking at the on-chain data reveals another layer of insight. Bitcoin's blockchain shows steady growth in unique addresses and transaction volumes, indicating genuine adoption. USDT's metrics show its crucial role in market liquidity and cross-border transactions. Trump Coin's on-chain data tells a different story: massive concentrations of tokens in few addresses and trading patterns that suggest coordinated pumps and dumps. The technological aspects of these assets deserve closer examination. Bitcoin's proof-of-work system, while energy-intensive, provides unmatched security and decentralization. USDT's implementation across multiple blockchains offers flexibility and redundancy. Trump Coin's use of Solana provides high speed, but at the cost of greater centralization, a trade-off that reflects its different priorities. The market structure surrounding these assets is equally telling. Bitcoin has spawned an entire industry of custody solutions, ETFs, and derivatives. USDT has become the foundation of crypto market making and lending. Trump Coin's market structure is primarily retail-focused, with limited institutional involvement, a reflection of its true nature as a speculation vehicle. The risk profiles of these assets couldn't be more different. Bitcoin's risks are primarily regulatory and technical. USDT's risks center on questions about reserves and regulatory compliance. Trump Coin's risks are more fundamental. They're about the sustainability of attention and narrative in a world of endless distractions. What does this all mean for the future of digital assets? Bitcoin's path forward seems relatively clear: increasing institutional adoption and gradual mainstream acceptance. USDT's future is tied to the evolution of stablecoin regulation and the bridge between crypto and traditional finance. But meme coins like Trump Coin represent something more uncertain. They're experiments in viral finance that could either fade into obscurity or evolve into something entirely new. The investment implications are crucial to understand. Bitcoin has established itself as a legitimate, if volatile, asset class that's increasingly correlated with macro risk factors. USDT serves not as an investment, but as crucial market infrastructure. Trump Coin and other meme coins represent pure speculation, not necessarily illegitimate, but requiring a completely different approach to risk management. The long-term significance of these different approaches to digital value creation cannot be overstated. Bitcoin has shown that digital scarcity is possible and valuable. USDT has proven that blockchain technology can bridge old and new financial systems. Meme coins have demonstrated that value in the digital age can come from narrative and community as much as utility and technology. What's particularly interesting is how these assets interact with each other. Bitcoin's movements often influence the entire market, including meme coins. USDT provides the liquidity that makes trading all these assets possible. And meme coins, surprisingly, have contributed to broader crypto adoption by attracting new users through their accessibility and entertainment value. The future will likely see these distinctions become even more pronounced. Bitcoin may continue its evolution toward digital gold status. USDT and other stablecoin might become more regulated and integrated with traditional finance. Meme coins could evolve into something entirely new. Perhaps digital social tokens that explicitly value influence and community rather than pretending to be currencies. Looking ahead, the key question isn't which of these assets will win. They serve different purposes and can coexist. The real question is how they'll shape our understanding of value in an increasingly digital world. Bitcoin has already changed how we think about money. USDT has shown how digital assets can be integrated with traditional finance. And meme coins, for all their apparent frivolity, have revealed something profound about the nature of value in the age of social media. The lessons for investors are clear. Understand what you're really buying. With Bitcoin, you're buying into a technological revolution in money. With USDT, you're buying a tool for crypto market participation. With Trump coin and other meme coins, you're buying into a social phenomenon, potentially profitable, but fundamentally different from traditional investments. These distinctions matter because they shape how these assets should be evaluated, traded, and regulated. The same metrics can't be applied to all digital assets any more than the same criteria can be used to evaluate bonds, baseball cards, and performance art. Each requires its own framework for analysis and valuation. As we move deeper into the digital age, understanding these distinctions becomes increasingly crucial. The future of finance will likely include all these types of assets, each serving different needs and operating under different principles. Success in this new landscape requires understanding not just the technology and economics, but the human factors that drive value in the digital age. The story of these three assets, Bitcoin, USDT, and Trump coin, is ultimately about more than just cryptocurrency. It's about how technology is enabling new forms of value creation, how human nature shapes financial markets, and how the very concept of money continues to evolve. As we watch this story unfold, we're not just observing a new financial technology, we're witnessing the dawn of a new era in human coordination and value exchange.